1414715 is where we're at. Rupen Rajguru is head of equity investment and strategy at Julius Baer. He's joining us now. Rupen, good to have you with us here, and thanks for your time. So you're focused on the one large sector, which is, still relatively down over the last one and a half odd years or so. IT services, Rupen, and you're saying that it's time to buy the space. What exactly there, and just give us a brief sense on why you think so.
Okay, yeah. Hi, afternoon, Prashant. Typically what we have seen that markets usually at an overall level have cycles. Companies also, while there are structural stories, will always have cycles. And we have seen this story play again and again with many sectors, and IT also over the last 10 years. We have always seen, people writing obituary for the IT sector, and then we have seen a smart rebound, and nothing could go wrong 2 years back, and now probably everything that can go wrong, at least that is what people are fearing. The good part is that all the fears at least are known, are there in the price. The latest fear, the latest joker in the pack being AI, and to what extent AI will impact the Indian IT services. It's too early days. At a margin, historically, we have seen a lot of these big trends. The Indian IT services do tend to get benefited out of it. Who knows? There might be more business which the Indian IT companies will get thanks to the way the AI is. While there is always fear that AI will impact, some of their basic business. But net, if I were to now invert and see that in the current price, probably, people are baking in the most conservative estimates. When the corporates met this quarter in the commentary, the memory of SVB and the First Republic was fresh in their mind. So the commentary also was pretty conservative. So net, what the point I'm trying to say is that now, because of the correction in last almost one and a half years, the IT stocks have come to a level in which, their FCF yields is pretty attractive. Plus on the dividend yield, also they are looking pretty good. So in an environment in which we are at an all-time high market level, definitely there is a case of investing into IT, which probably I would say it's at its cyclical low, and that's the time at least I believe one has to buy into.
Rupen, I understand cycles, and over a long period of time, it's okay at what point you enter in. But do you think when it comes to technology, we're already at the bottom of a cycle, or we've just started the descent lower? We're at the beginning of the down cycle when it comes to IT. I get that eventually it will pick up, but just want to understand where we are right now in terms of the down cycle. At the bottom or at the early stages?
I guess I knew that, Rima. But I would say, so typically, while at least on the commentary side, we are clearly seeing, a bit of, discretionary spending wise, there is a bit, companies are not forthcoming. So if, to answer your question straight away, Rima, if the US gets into a steep recession, then definitely this is the beginning of the down cycle, and we might see much more worse time. Do we see that in our base scenario? As of now, the answer is no. But yes, if we will change our stance if we clearly see visible signs of US getting into a steep recession.
All right, Rupen, I'm not sure how big a cricket fan are you?
Yes, I think it's going to start, or it's going to just now the World Cup final. Yes.
Yeah. What do you think? We're going to be bowling first, which I don't think it's it's debatable given the overcast conditions. So hopefully our boys, they bend their backs in there. But we have left out Ashwin. That's a little bit puzzling. We're going with Jadeja and we're going with 4 seamers. Any take on that?
I think just like markets, the recency effect, right? The way Jadeja played in the IPL final. So that also definitely would be playing in the mind of selectors, right? So everybody has this recency bias, I guess. That would have been the clincher for it.
All right, I think the first ball is going to be bowled, Rupen. It's a little bit of a debate out there on Twitter whether or not Ashwin should have made it to the top 11 or not, and he should have come in, and whether or not we should have played both Jadeja as well as Ashwin. Well, we'll know in the next 5 days or so, but for the time being, the bowlers have to bend their backs and, bowl the Australian team out twice. Rupen, let's get back to markets. You like a couple of domestic themes. autos as well as cement. How much of the good news is in the price? One encouraging aspect from the autos particularly is that two-wheeler sales are picking up now. That's something that we didn't see earlier. How would you play autos as well as cement?
So first on autos, Nigel, while the last month data was positive, some early commentary by the largest two-wheeler company about recovery or the green shoots in the rural market, and hoping that with some of the doles which government might be giving before the election, the rural economy should see some revival, which would help two-wheelers. But if I were to look into the big picture, both the two-wheeler and the four-wheeler, like passenger vehicle, last 10-year growth has been just 4% compounding. If I were to take a reference point as 2019, just before COVID, both two-wheelers as well as four-wheelers overall volumes are low. This year, the benefit of lower input prices are very much there, and hence we have seen a good margin expansion coupled with the volume growth. That clearly the operating leverage is visible. It was visible in the previous quarter, and we expect in next 2 quarters also that to be visible. So on the earnings side, we expect overall autos to post decent earnings. So while valuations are no longer as compelling as what it was, say, a year and a half back, but I would say still in the current environment, companies which are posting decent numbers should see good interest from the market. So that's as far as auto is concerned. Cement, for last 2 quarters in a row, we have seen a quarter-on-quarter growth in their EBITDA per ton. And I think that's clearly because of again, the same story of lower input costs, particularly the petcoke prices have come off, and that has helping the margins for cement companies. Plus, the volume growth has been pretty strong, and historically, we have seen in a year before the election, the overall environment and as far as demand is concerned from infrastructure construction is pretty strong. In fact, the latest numbers from the state government capex has been also pretty robust. So that augurs well for the volume growth of cement. And I think the margin expansion story will continue. So at an aggregate level, this quarter, the EBITDA per ton was close to, say, 970, 975. We might see it, in this quarter to get into 1,000 plus at an aggregate level. And that should help the cement sector as well. So all in all, both we are pretty constructive on both cement as well as cement.
In QSR, Rupen, how do you pick the winners? Because you have pizzas, you have different types of burgers, they're differentiated by the geography they're serving in. So there is a lot of choice now. So if one has to pick the right one, can you give us some indications on how to go about choosing this QSR theme that you like?
So Rima, here, if you see, again, from a stock market perspective, we are also seeing a deviation between, say, some of the QSRs, especially on the burger side. I think they have done much well, and the pizza conglomerate has not done that well. But if you see the way to look at it, we would say the companies which has demonstrated pretty strong execution capabilities, which is the largest player out there, which has relatively been underperforming the market for last 1.5 odd years, and they are constantly adding a new franchisee as well. So apart from pizzas, also getting into sandwiches and other stuff. So I think the largest player, which was the big outperformer some time back, but has been a big underperformer. So we would bet into that player, because here we have seen companies which has executed well in the past will continue to do that, and hence our bet would be on that.
Okay, well, Rupen, we'll leave it there. Thank you very much for your time. Good speaking with you, and thanks as always for being here on CNBC TV18. We'll take a quick commercial break here. We're up 125 points. We get you a quick check on what's happening in dealing rooms. Nemesh joins in for D Street Chatter, and of course, after that, our technical expert joins in for quick short-term trading ideas. Stay with us.